Have you ever felt like investing is some exclusive club you're just not invited to? You know, like there's a locked door and you don't have the key? Well, guess what? We're about to give you that key. We're going to unlock one of the simplest, most powerful tools out there for building your wealth, the mutual fund. Let's dive right in. So let me ask you a quick question. Where's your money right now? I mean, really. If you're like a lot of us, it's probably just sitting in a bank account, earning, pennies in interest. It feels safe, right? But it's not really doing anything for you. Honestly, it's kind of sleeping on the job. In this slide right here shows the two paths you can take. Over on the left, you see that flat line? That's your savings in the bank. Yeah, it's steady, but it's not going anywhere. Now look at the right. That's the market. It's a bit of a roller coaster for sure, but look at that potential for real growth over time. The big question is, how do you get on that ride without needing a fortune to buy a ticket? Okay, so here's our game plan. First, we'll tackle the big challenge every small investor faces. Then, we'll see why mutual funds are pretty much the perfect solution. We'll get into the nitty-gritty of how they work, cover the 4 biggest benefits, and, this is important, point out one critical trap to avoid. Then, we'll wrap up with your first step forward. So let's talk about that first hurdle. It's this feeling, this myth, really, that you need a ton of cash just to get in the game. It just feels like this exclusive club with a crazy high cover charge, right? And there's a reason you feel that way. Ever notice your bank doesn't really talk to you about investing? Well, here's a little inside baseball for you. They want your cash sitting right there in their accounts. That's how they make their money. So they're not exactly going to push you to move it somewhere else where it could grow faster. But this is where mutual funds come in and completely change the game. The idea is so simple, but it's absolutely brilliant. It's all about strength in numbers. Think of it like a giant financial potluck. Instead of you trying to cook this massive, complicated feast all by yourself, everyone brings a dish. That's a mutual fund. You put in what you can, someone else puts in what they can, and all of a sudden, you've created this huge, professionally managed investment. And when you add all those smaller amounts together, boom, you get something massive. In this example, it all adds up to a $2.5 million fund. Now that is some serious investing power, all ready to be put to work by a pro. So how does this actually happen? How does your 100 or 1,000 or whatever it is get from your bank account into this big, powerful fund? Let's trace the journey step by step. It's really just a 5-step flow. 1, you put your money in. Simple. 2, you get back something called units, which are basically your little slice of the whole pie. 3, a professional fund manager takes that entire pie, the whole pool of money, and invests it. 4, every single day, they calculate the total value of that pie. And 5, the price of your little slice gets updated based on that new value. And here's the best part. It is completely transparent. You don't have to guess. Every single business day, you know exactly what your investment is worth. If the fund does well, the value of your units goes up. It's really that straightforward. Okay, so this whole process leads to some incredible advantages, especially if you're just starting out. This is really why mutual funds are such a game changer. There are 4 huge ones. First up, diversification. Instantly, you're not putting all your eggs in one basket. You own a tiny piece of tons of different investments. Second is accessibility, which means you don't need to be rich to start. We'll come back to that in a sec. Third, liquidity, which is just a fancy word for being able to get your cash out quickly when you need it. And finally, regulation. These things are heavily supervised, which gives you a big layer of protection. So let's talk about that accessibility point again. How much money do you actually need to get into this exclusive club? How about $200? Yeah, seriously. You can often get started with an amount like that. Just let that sink in for a moment. The whole idea that investing is only for the wealthy, it's a complete and total myth. All right, but it's not all sunshine and rainbows. I've got to be straight with you. There is one major trap you need to know about. And honestly, paying attention to this one little thing can save you a world of trouble later on. So the issue comes from something called a specialized fund. The law says that if a fund calls itself, say, a government bond fund, it only has to keep a little more than half, just over 50% of its money in actual government bonds. The rest, well, that can be invested in other things. And that's where people get tripped up. A fund's name, it just doesn't always tell you the whole story. You might think you're buying into the super-duper safe government bond fund, thinking 100% of your money is in safe government debt, but you could be in for a real shock. This chart shows you exactly what I'm talking about. See here, this government bond fund has 70% in government bonds. Okay, that's the safe part. But look at that other 30%. That's invested in corporate bonds, which can be a lot riskier. So if your goal was to be super conservative, well, you're taking on more risk than you thought. So, what's the big takeaway here? It's simple. Always, and I mean always, look under the hood. Don't just trust the name on the label. You have to check the fund's official documents. It's usually called a prospectus, and see exactly what it's holding. It takes 2 minutes, and it is the single most important check you can do. Okay, wow, we have covered a lot of ground. You now see why just leaving your money in the bank isn't a great long-term plan. You know how mutual funds work as a powerful alternative, and you even know the #1 mistake to avoid. So, let's bring it all home. So, let's just recap the highlights. Mutual funds are super accessible. You can start small. You get instant diversification. You have high liquidity, meaning you can get to your cash fast. And the whole thing is regulated and run by professionals. For anyone wanting to get their feet wet in investing, it is hard to beat. We started this whole conversation talking about a locked door. Well, now you have the key. That path to potentially growing your money is wide open, and getting on it is so much easier than you probably thought. So the only question left is, what's your first step going to be? Your financial future is waiting for you.